we mess up, it doesn't matter.
Well, it does.
What?
You can't mess up.
I'm not gonna mess up. What do you mean? I'm not gonna mess up.
It's recording. I have you on camera. If we mess up, it doesn't matter. That would be the cold intro. Hello, everyone. Welcome to the Nasdaq Dorsey Wright podcast for the week ending on April 4th. My name is Ian and joined by Miles Clark back again.
I'll tell you, it may be April 4th, but these markets have make you feeling like April Fools.
There you go. That's a solid joke to start off a not very funny trading day. We're recording this Thursday afternoon on April 3rd, and yeah, not many jokes going on across the market. We're seeing a lot of red on the screen.
Yeah.
There's some interesting areas of green that I think are maybe not notable, but interesting. I mean, you have like Philip Morris is up 3% today,
Right.
so maybe stress levels being a little bit high is good for that good for that particular asset area. But broader markets, I mean, you have the Nasdaq at different points in the day has been down worse than 5%,
right?
Both the composite and the Nasdaq 100. You have the S&P down 4+%. You have the S&P equal weighted index down more than 4% at points. I mean, it's pretty broad based, at least from an index perspective.
Right. And just to set the stage, of course, we jumped right into the performance, but we're recording yesterday right at close. Of course, we had Liberation Day where there was an announcement of sweeping tariffs across the board. We won't get into kind of all the details, but I'm sure, you listening at home are familiar with what we're talking about. But that's been the kind of the catalyst towards the downside.
Yeah. And I mean, in looking at just a brief review for looking at some of the movement, there were expectations across the marketplace that something was going to happen.
Right.
There were high expectations. There were low expectations. Initially, when watching, I was watching futures kind of right as soon as the event started, and you saw futures up 1%. And then as soon as expectations, things were okay, 10%, not that bad. That was kind of the low end of expectations. But then it was on top of further tariffs on reciprocal tariffs on other countries. Maybe not as much for some, a lot more for others. And that led things into a pretty steep decline. And it's kind of been going since.
Yeah, you and I were joking earlier this morning when he brought up the big board.
Yeah.
The market started
It's like the big board just said sell. This was kind of what it seemed like, because that's what markets did. And it just started dropping off a cliff there. But we saw that we were looking at, I was looking at movement last night, really just kind of to put my mind at ease, looking at historical movement overnight in the S&P. And you saw the movement overnight for SPY, at least, was about a 3.53% decline from Wednesday's close into Thursday morning's open, 3.53%. That places us about 15th in terms of worst overnight moves since 1993.
Jeez.
So there's a lot of clusters in there. So you have like half of those 15 occurred within the last 3 weeks of March of 2020.
Right.
You had a lot more in the September-October timeframe of 2008, a few in 2009, both before and after the bottom. You had a few in April of 2020 after the bottom, right? So it wasn't necessarily as indicative of, hey, the end is near or the end is already here. It was more so just indicative of volatile environments was really what I could take from it.
Oh, yeah.
And so, which I guess set my mind at ease a little bit, being like,
it's only the 15th worst night ever, right?
Right. Yeah, it was tough to be looking at the numbers there last night. But when the other interesting thing I was looking at that is we haven't seen the VIX spike a ton. We'll get into a little bit more of that maybe in a few, but we have the VIX is kind of at the north end of a range that it's been in for 6 months or so. I would have thought it would have been higher. But when looking back historically at some of these other environments, you see kind of similar moves. It's not like a massive, typically these big overnight moves. Now, granted, when you had like a few, like an 11% down day, a 7% down day, some of those like in the early 2000s, right? Those do see massive big spikes overnight. So when there's a one huge event that the market did not see coming at all, then you do see a big spike.
Yeah, and sorry, not to cut you off, but maybe just to go where you were going. But I mean, you have this idea that they didn't see it coming at all. With Trump in the cards, not to say he's a wild card, but maybe the market did price in a little bit. Maybe it
Yeah,
was a far off chance, but it wasn't like it wasn't in there at all that tariffs were going to be
exactly.
crazy or
Exactly.
much higher than expenses.
The yesterday's event, Wednesday afternoon's event was well publicized ahead of time.
Right,
Something was going to happen.
right.
What was actually going to happen, we didn't know ahead of time, and markets don't like it.
No, they don't. I mean, you look at the average stock you mentioned to kind of open up the call, the areas of red have, not discriminated. We've talked about in previous podcasts, the core of the market, the kind of Magnificent Seven, which we'll get into more in just a moment. They've really fallen. But today, pretty interesting chart development for the S&P 500 equal weighted index. And we'll throw that chart up on the screen right now. We did see that move lower on its default chart, returning to a negative trend for the first time since late 2023. So we've broken a trend line, posted a second consecutive sell signal here, fallen lower. Silver lining, we are oversold, but the kind of the damage is already done in terms of that kind of longer term picture and longer term trend.
Yeah, and in coming into that move today, right? You had the S&P equal weighted index about flat on
Yeah.
the year, down 0.09%. So very basically flat. Broader S&P down about 3.5%. And so now you see both down in sympathy with one another. S&P down about 4% ish on the year, at least at the time of this recording. S&P kind of getting a little bit closer to that 7 to 10% mark. So it's not that today's movement is saying, hey, all stocks are the same. It's just maybe we're seeing the equal weighted kind of move into oversold territory, a place that hadn't really been throughout a lot of this pullback.
Yeah, right. I mean, you look at the overall picture, it's not like, and we were just on a webinar going through the
You
quarterly
were on the
report.
webinar.
Yes,
So,
but that's
did a
okay.
wonderful
You were
job.
there in spirit. But talking about we've seen near-term cloudiness or concern for both the core Magnificent Seven, kind of cap-weighted S&P 500, intermediate to concern for both of them. This now kind of establishing maybe some longer term concerns for other areas outside of the market. You look at small caps. They've been laggards for quite a while. IWM breaking trend on its chart today. So small cap weakness continuing to drag lower. These other areas that, maybe are a little bit less tariff oriented. Who knows? I mean, we won't get into
Yeah.
that conversation
Well, we
yet.
can jump into this small cap conversation. I think that when you look at the S&P, it's the cap weighted stuff have been doing so well,
Yeah.
and then Mag 7 stuff pulled back pretty notably. The heavier stuff in the cap weighting pulled back pretty notably, and now the equal weight's kind of catching up. Small caps have not been looking great for a while,
Right.
right? You can looking at the default chart of IWM. I think that kind of helps explain that picture. You saw it really just drop off a cliff right after the mid-January of this year, just fell vertically lower in a single column of O's. We're not a stranger to big columns on this chart. We've just been a stranger to big columns of O's recently,
Right.
I guess, and seeing it. But I mean, you saw IWM violate its trend at 196, moving below that 200 mark, sitting at 190 at the time of this recording, right in between a couple support levels that we were at in January of 2024. But it's pretty heavily oversold at this
Yeah, I
point.
was just pulling that up as you were talking. So we're going to be at around 126 in the negative or
When was
126%
the last time we were
oversold.
there?
The last time we were there, we got it was in 20 what do you think?
2020?
2020,
Yeah,
March 20th, 2020, right?
right.
So I mean, we're seeing significant downside participation.
But it's not like that
IWM,
was coming from a point of strength. The
no, well,
IWM is
that's what I was going to say.
0.42 fund score. It's pretty weak.
Yeah, I mean, you're already down 8.5% so far this year. You add another 6.5% to it today. Quick math, that's somewhere over 15 or near 15% to the downside. So,
Yeah,
you're not seeing participation. Momentum's told you to stay away from small caps
it
for
has.
quite a while.
Yeah.
And so, this is kind of one of those points where,
Quite a while being like 3 months.
well, yeah, I mean, you've seen back and forth action from them,
Yeah.
but point being, this is where one of those maybe feathers in the cap of momentum where you can find some. It's something can always get more oversold, right? And so a lot of people are constantly saying, "Oh, well, it's down 10%. I liked it at X. I'm gonna love it down 10% more,
And a lot of
right?"
10% cheaper.
Right.
It can
That's not
keep
always
getting
the case.
cheaper.
Yeah. And so, small caps are one of those examples here. And there are many of them in this type of market. So just, be aware of that.
Yeah, and I think an interesting point for small caps there is that we saw a real clear but wide range between the about 160-ish up to about 200 small caps, really going back to the midway point through 2022,
Right.
just kind of bouncing around in that range over spans of months, right? We finally looked like we were out of that range throughout last year.
Right.
It started kind of the year right around the 190-ish point, and you just got kind of real steady improvement up into the topped out at 240 in November, and we're now back down in that range. And so the prior resistance, kind of maybe looking at some semblance of support. We'll see if that holds up around the 188-ish point, which had been some resistance points in the past. But if we move past 188, I mean, we're looking at next support really down at 170, 168.
Right.
So that's a concerning point.
Well, and the saying is that history doesn't repeat, but it often does rhyme, right? And so we look at old resistance and we say, okay, well, we moved past this range before, right? I remember talking about this in 2023 where we would get up to, to 200 on this chart and we'd say, up, I know exactly where we're going, right? We're going back down to the bottom of this range like clockwork, right? And so you move back down into that range. That's not going to be a constructive sign either, especially when you give up a point that bulls were struggled so mightily to claim for themselves just a few years ago.
But maybe it holds. Maybe that 188 level holds. Maybe we get a reversal back up from this oversold territory. We were talking a little bit before we started recording about how small caps, I mean, when you think about the tariff picture, obviously we're not looking at things from a fundamental perspective, but it is very different with small caps being a little bit maybe less exposed to other countries. If we get retaliatory tariffs, maybe that could end up being a little bit better for small cap. Who knows
Sure.
what we're going to see moving forward, right? But we'll just let the price action kind of dictate. Right now, price action clearly in the negative for small caps, but heavily oversold. So I think that'll be an interesting place to watch over the course of the second quarter.
Certainly. And another interesting place to watch, maybe we can go from small caps to the mega
From the
cap
smallest
names.
to the biggest.
Exactly. Yeah. I mean, you've got the Magnificent Seven. Now, these guys are no stranger to our podcast in 2025, talking about their relative weakness. Lots of developments happening over the course of the day, the week, the year so far. We picked out a couple ones. Why don't you start us off with your favorite, and we can kind of run from there.
My favorite.
Sure,
So my old favorite, is that fair?
Yeah,
NVIDIA
sure. Yeah.
was the old favorite.
All of our old favorite.
Yeah, right. Everyone's old favorite until it was sold by our models in January, which ended up being a pretty good sell. But NVIDIA fell to a negative trend with movement over the past week. I believe that happened on Monday. So NVIDIA did move. Finally, we've been talking about the trend line a little bit. It was getting pretty close, showing some clear consolidation in the 110-ish range, and then kind of broke beneath that threshold, moved into a negative trend, moved it to a 2 attribute rating, which places it in technically a sell criteria based upon our technical attribute rating system. 3 is a hold, 2 is a sell. And so does fall into that classification. It's currently sitting at a double bottom on the verge of giving a second consecutive sell signal. The signals have been flip-flopping back and forth. This stock moves around a lot, but that trend is, I think, important, and the attribute is certainly important. We were talking earlier. It's getting pretty close to moving down to a 1 potentially, right? Which it has not been in quite a while. If it moves to a sell signal, that'd be against the market. Is that right?
Yes, exactly.
It's been in a buy signal against the market since January 2023. Would be kind of maybe further confirmation to the negative side if we do see that signal given. That would not be a great sign for just a year ago, the darling of the market.
Yes, exactly. And this was kind of, writing on the wall. You look at like SOXX as a representative that broke trend,
as NVIDIA goes, so goes semiconductors.
Exactly.
Really.
I mean, just
so far,
you and I didn't plan on talking about it, but if you pull up that SOXX chart, that SOX chart, I mean, way oversold. It's down, 9% today. Consecutive sell signals, negative trend. We're doing a lot of jargon here, all really to say the same thing is that, these areas in the market that led us in 2023, led us in 2024, they are showing weakness alongside the other areas that we already mentioned today.
Right.
Now, I'm curious, personally, I am curious on where or how this develops, right? Do we see now people are now focusing on tariffs? They're now focused on how scared they are of a recession. Do we see a rotation back to those names? I'm not saying we will. I'm curious to say, okay, well, is it a flight back to growth focused safety or like the cash cows of the world, the Apples, whatever it may be? We're not seeing that right now. That's not what the charts are telling us. So I guess I don't believe that that's going to happen because I'm looking at the chart. But it is a question, right? We've seen a flight to these Magnificent Seven stocks before when there were growth concerns. I wonder what it's going to look like
I mean,
as we
everyone's
move
worried about
into.
is there a bubble? Is there a bubble? I mean,
Yeah.
that bubble, the SOXX 0.18 fund score down 12% on a year-to-date basis. Nvidia going to be down about 20% after Thursday's market action is finished up. If the bubble's kind of popped, if it was
Right.
there, right? But I wouldn't even call it a bubble. Looking back historically at a lot of movement, semiconductors historically move around a lot.
Right.
They moved a lot to the upside for a couple of years, and they moved pretty sharply to the downside. I don't think looking at it from a 50,000 point view, that's not an absurd thing to expect.
No,
After you
it's
see
not.
such significant movement, some cooling off period. Now, does that mean we're going to see semiconductors go straight back up? Probably, maybe not.
Right.
Maybe they will, but maybe they won't. Maybe some consolidation or sideways action after such a rapid period of growth wouldn't be the worst thing in the world for some of those stocks.
No, I tend to agree with you. Looking elsewhere within the Magnificent Seven, we pulled up Nvidia, talked about SOXX.
Mm-hmm.
Another one that's quite interesting, we're talking about trend breaks. Apple,
Yeah.
AAPL. This is actually one of the few Magnificent Seven stocks that still hold, at least at the time of this recording here, a favorable technical attribute rating, right? You have Meta, that's a 4 out of 5, again, at least as of the time of this recording. Apple just changed trends, so at least it will be a 4 as of action on Friday the 4th. What do you think about this?
Yeah, I mean, so Apple's two consecutive sell signals now, like you said, it did move into a negative trend, dropping down to a 4 attribute rating. There's notable support right at the 196 point, which is also going to correspond with the getting pretty close to the bottom of that trading band.
Mhm.
Apple's not as oversold as some of the other areas. It's getting into more oversold territory though. It hasn't seen the same level of weakness that a lot of these other names have seen throughout the year. We're seeing a major sell off on Thursday, obviously, but like you said, its technical picture from a longer term perspective, a little bit more favorable. When you look at that 196-ish point, 198, really notable resistance from 2023 was reached twice and it couldn't break through that all-time high. Remember, got right up to it, fell back again, finally broke through to new all-time highs at 200 back in June of last year. I would expect that 200-ish level to be a notable support point for Apple moving forward.
Mhm.
If that's violated, I mean, you're looking at 170 as further support.
Right.
So that would be kind of the line in the sand where I'd look toward. Like a lot of other names, it's been no stranger to big columns.
Mhm.
Apple has seen big columns to both directions over the
Right.
past couple of years.
Certainly.
Yeah, and so holding up a little bit better, not on Thursday's action independently, but at least on a technical perspective, not as weak, consistently weak as some of the other areas.
Right. I mean, again, and you compare this, you look at Apple down 10% through the year through Thursday, it's going to add to that. Now, you kind of sit there, Miles, Ian, how are you still calling that technically, strong, right?
Well,
Compare that to just
it's all relative.
yes, compare that to, at least in terms of the Magnificent Seven, compare that to Tesla down 30, compare that to Nvidia down over 20. Compare that to Google down over 20, right? So we're starting to see, okay, hey, these are relative before today. All of those numbers are before today. So at least in comparison, we're not calling Apple a screaming buy, right? But we're just simply saying relative price action has held up a little bit better for the Apples, for the Metas, at least when you're looking at the Magnificent Seven in comparison to the other parts of the Magnificent Seven.
The most confusing Magnificent Seven stock for me though is Microsoft.
Right.
Because you talk about relative outperformance, underperformance. Microsoft heading into action on Thursday was down 9.3% on a year-to-date basis. It moved to a negative trend on Monday, same day Nvidia did, move into a 2 attribute rating, same attribute Nvidia moved to. We come into Thursday's market action, not as weak nearly as other areas, down 1.7% on the day, right?
Probably not as exposed to internet like tariffs, like
The
supply
price seems to
chain
be
deal.
saying,
I mean,
right?
yeah,
I mean
something
that's
like
what the movement seems to be there. It's a little bit more deeper and it's toward the bottom of its trading band than something like Apple, right? But that name has been seeing a little bit more muted movement to the upside and the downside.
Mhm.
I think that trend line violation, I think, is important though. So we'll see if that because it started to get closer to the trend line in 2023, August, September, wasn't showing the same kind of action and then rocketed higher, rocketed relative for it. I think that'll be a pretty interesting point to monitor. Support at 364, or if it's going to move back up towards the middle of the trading band around the 400 point.
Yeah, I mean, that's definitely going to be a point to watch. I don't necessarily have anything else to add specifically on Microsoft, so I won't just ramble at you.
Well, we
We
talked a little bit earlier about VIX movement.
yes,
And
there
I
you go.
think that that's a notable chart. I mean, we're getting real chart heavy because there's a lot of charts that we've been staring at for the past several hours. When looking at the 1 point chart for the VIX, 30 has been a kind of a line in the sand since August of last year, um, of where it couldn't push higher from. In December, it pushed up to 28, fell back lower. In last month in March, it pushed up to 29, fell all the way back down to 17.
Hmm.
And now is back up to 29, backed off from that a little bit, but a high of 29 on Thursday's market action. We saw much higher VIX levels throughout 2022, obviously cooled off in 2023. The Japan unwind, carry trade unwind spike in August, and that 30 level is it hasn't been able to really go north of that much. I think that'll be another interesting point. The VIX has not been moving around as much as people might have expected, and it's been extremely quick to move lower.
Now, a counterpoint to that, we have not seen the VIX, at least in 2025, test the levels that we'd seen as lows in 2023 and 2024, right? You look at kind of that level around 13 or 14 there. We've been above those levels, not incredibly above in terms of elevated movement, but we haven't gone back down to the levels of kind of lower volatility. I wonder why that is.
That's a fair point.
Yeah,
When you look at the
that was a joke. You're supposed to
uh,
Well, I wonder why it is, right? It's supposed to be.
right, right.
Never
But
mind.
no, but I think it's a fair point. When you
Yeah.
look at it, though, it's at it was 13 in December, then the low was 15, then the low was 17. I mean, it's just kind of a slight stair,
Yeah.
the higher lows in a bad way
Yeah.
here, right? I think that'll be interesting to note because when you look at that movement back in the heading into 2022, we did see some kind of similar action at the beginning of 2022
Mhm.
as the VIX started to stair step higher up into the mid 30s.
Yeah. I mean, yeah.
There's a lot of interesting to see. We'll wait how that shakes out.
Certainly.
But I think that all these charts are important to monitor. The charts are there for the reason. There's a reason why we look at the charts. They show patterns. They show some kind of consistency, or they don't, right?
Right.
And so we're trying to focus on the areas that do show some kind of action or at least historical movement that we can take to have levels to look toward to see if things are going to change. Because in a market environment like this, I think it's more important than ever to try to maintain a more objective process
Yes.
oriented approach. And the only way you're going to do that is by following the charts, following some of these important technical levels, following some of these relationships, because you don't want to be thinking with your gut in a time like this. You want
Right.
to let the charts tell you what to
Or
do.
the news headline, right? Because there's going to be
Yeah.
something that's going to
Which
happen
news?
even, yeah, exactly. Right. And so having a way to kind of look through that, weed through the noise, of course, there is still going to be noise on the charts, right? We're not, but the goal was to weed through the noise. There is still possibility of back and forth action
Yeah.
or whatever chart you're looking at. We're certainly not claiming that there's not, but having a system to help you kind of look through that and make objective decisions based on what price alone is telling you, that's the kind of the major key, right? And so that's what we'll go for. I'll give you the final word before we wrap up because I think we could probably spend another
We
hour.
could keep going
Yeah.
through. I mean, that was only half the charts I thought we were going to go through, right?
Well,
We got to
pull
go
them out.
through. Yeah, we're just going to go through
Golds, crude. I mean, what we didn't even talk about
the whole
those.
XLG. Let's run through that.
Yeah.
No, I think obviously there's a lot of other charts that we can look at, but I think at that point in environments like this is why we have the indicators. This is
Yeah.
why we have the charts. We haven't hit on a lot of the indicators because we're expecting some of those to change.
Yeah.
We're seeing heading into this, we saw cash had shown some signs of strength. We saw the bogey check move to a fail for domestic equities earlier this year, right? We saw the cash percentile rank for domestic equities ticked up into the middle third, saying the cash was beating roughly 40% of domestic equity related stuff in a matrix. The money market percentile rank on the group scores page had been very, very low. So much so that we started to get questions, why is this thing so low? And that we would expect some upwards movement after Thursday's action. We'll see how high that gets. But follow the indicators. Try to remain a little bit subjective. Don't be thinking with your gut in a time like this. Let the charts,
Objective, not subjective.
sorry,
Yeah.
think objectively. Let the charts kind of tell you which direction to go in, and try to take it as you will from there. Right.
Couldn't said it better myself.
Cool. Well, I guess you did enough talking on the webinar earlier. So now,
Yeah,
don't
wrap it up.
don't want to have that voice be sore. So with that, if you have any questions on any of the market action, definitely don't hesitate to shoot us an email. What's the email address now?
NDW support@nasdaq.com.
Yeah, reach out to us, give us a call if you're a subscriber. We're more than happy to help you out. That's why we're here. We're taking a look at all these charts all day long, so you don't have to, right?
Exactly.
So give us a call and we'll do our best to help you out.
Good luck, everybody.
Thanks for tuning in. We'll be back touch base next week.
Bye-bye.